information as we go through it. Please just pop them in there and we'll get started. Okay, this, by the way, is just what's called the SPY Super System. Is a piece of software I'm gonna show you, which identifies when institutions are in the trades and when they're not. It used to be called the Compass system. It's been improved since then, changed the name to SPY Super System, but I still call the alert service the Compass SMS text alert service. This is where we send the highest probability trade setups out to your phone, where you can trade with me. We just sent one out on Apple today, as a matter of fact. We're long Apple right now, and so that's this is what it looks like. It just comes through on your phone. I'm a member of the alert service as well. I have alerts come to me so I can determine how fast they're coming through. I get them in about 5 to 8 seconds or so from one time I send them out. Okay. Now the first thing I'm going to talk about here briefly is I want to talk about what moves the market, what creates a trend in the market, uptrend, downtrend, what does that? And the market is made up of two groups. We have these little small marbles here, retail traders such as myself and most likely most everybody here. We're retail traders. We can't move the market. It's important to understand that when retail traders are trading and there isn't any concerted effort on the institutions, there's basically no institutions all trading in the same direction. We're just trading in there against other retail traders. All you're getting in the market is a lot of chop and a lot of chaos. It's very difficult to make any money without having institutions pushing a trade one way or the other. And I'm sure you've seen it a lot where you just get chopped up. So these are myself and most likely everybody here. We're retail traders and we're looking to make money, and we take our money from other retail traders. Institutions, this is who moves the market. And this is made up of 4 groups. It's made up of investment banks, Goldman Sachs, Morgan Stanley, JP Morgan, HSBC, all the big investment banks that most everybody knows about. They're also made up of hedge funds. There's hundreds of hedge funds. Hedge funds have, again, they have billions of dollars to trade and invest. So they're part of the institutional group. Pension funds are also part of the institutional group. Large pension funds, police pension funds, firemen, state workers, lots and lots of pension funds, thousands of them around the country that invest in traded stocks. And the last one would be mutual funds, such as Vanguard, T. Rowe Price, all the big mutual funds. They also have billions of dollars. So this is when the institutions are in a trade and there's a bunch of them pushing a stock or an ETF in the same direction, that is where your trend is coming from. Now, if you've got institutions that are just fighting each other, you got some buying, some selling, you're not going to get the direction that you want. It's just going to be chopped. But once the institutions are taking a position on a stock or an ETF, et cetera, and moving it in one direction, that is what's creating the trend. And that's what we need to find. We need to identify those trends and trade them. I mean, that's what's gonna make us profitable. Okay. One thing I want to talk about here before I get into the SPY Super System is seems a little bit off topic. This is a blackjack table here. Oscar was just talking from Las Vegas, but this is a blackjack table. So this is a blackjack. You have an ace of spades, jack of spades, and we've got a couple of $100 chips right here. Right, so this is a blackjack table. So what in the world has this got to do with trading options or trading stocks? Well, the reason I say this is because if you've talked to anybody about telling them that you're interested in trading stocks or you're interested in trading options, what you're going to hear from most people is you're just gambling. Trading stock is gambling. It's fixed. You can't beat them. You shouldn't do it. I mean, that's the kind of feedback you get from most people, friends, relatives, etc., who don't know better. And the reason I put this up here is when I was much younger, very much younger, I made my living playing blackjack in casinos in Las Vegas, and as a card counter. A card counter, we don't count every card. What we do is track the composition of the remaining cards in the deck to determine whether it's in the house's favor or the player's favor. If there's a lot more big cards in the deck than there normally would be, then the player has an advantage. If there's more little cards in the deck, deuces through sevens, than there normally would be, then the house has a bigger advantage, so you just play very little of it. In other words, when the deck was in my favor, I would make larger bets, more hands, and when it went against me and the house had the advantage, I would just play one hand and just play the minimum bet. But that's how you do it. That's how a card counter makes money. And I did this for a good long time in Las Vegas. The reason this is important because it gave me a mathematical edge over the casinos. They didn't actually have an edge over me. I had an edge over them by knowing when the deck was in my favor. And they've done a lot since then to try to counteract that. They shuffle after every hand, etc. So you can't really do that much anymore. Although it is possible to do it if they're dealing down into the deck a little bit, even if it's a 6 or 8 decks. But anyway, I knew when the cards were in my favor. And trading stocks and options is very similar to that. Because without knowing what the institutions are doing, didn't know if the institutions are in the trade or not, the trader has no edge. So in essence, they're gambling. So if you don't have an edge, if you don't know if the institutions are in the stock or not, then you don't have an edge. But if you know they are, now you do have an edge, and you can become a consistently profitable trader by basing it on that. Now, a little caveat here: both card counting to play blackjack and trading both require discipline and emotional control. This is the hardest thing for most retail traders to manage. Right? You have the best system in the world, but if you don't have discipline and stick with the strategy, and you don't have emotional control, and you get flustered when you take a loss and you start doing revenge trading, etc., it's going to kill you. I mean, this requires discipline, emotional control. So it's not just knowing if the institutions are in there and what the good setup is and what trade you should take. It's creating discipline in yourself and emotional control in yourself, so you don't blow up your account. That's basically what happens. So the SPY super system, which I'm going to tell you, is our card. That's my card counting system. This is what gives me an edge over the other traders, other retail traders, because I have the ability to become consistently profitable because I now have an edge over them. I know things that they don't know, and that's what that SPY super system does for me. And the SPY super system, it's a piece of software, in conjunction with identifying the best high probability trades, can lead to consistent profits. I mean, there can be several stocks that you may be interested in trading for an intraday trade or for a swing trade that the institutions are in. But then you've got to look beyond that to find the ones that have the very highest probability, which we have some additional criteria that we use to pick the best of those. And so this is why I brought this thing up. This is why I brought this up about gambling. I understand it seems a little out of place, but that's why. All right. So in the room and in the on the alert service, we have two rules to trade by. We trade the best and skip the rest. Sounds really simple, but this is really important because we're only taking the various high probability trade setups, and we're skipping the rest. This is really important. Sorry about my news feeds going off in the background. I trade all day long and I have a news feed. Skipping the rest means not taking trades that may look good but don't have the high criteria that you need for those to be high probability trades. And this saves you a lot of money. And if you can skip a trade that would have been a loser, then that's just like putting money in your pocket. So it's just as important as trading the best. And this is what the SPY super system allows us to do. And this I repeat in the room every single day. Our objective is not to make trades. Our objective is to make money. That's what people are trading for. Our objective is to make money, not to make trades, which means we don't want to be taking trades just to take trades. So that's counterproductive. And this comes down to patience for traders. A lot of traders can't sit there for an hour, 2 hours, 3 hours without taking a trade. They feel as though they're a trader. I need to be making a trade. So they're just taking a trade to take a trade, and they start justifying why they took a trade. But they didn't really have a good reason. So again, our objective is not to make trades. Our objective is to make money. That's what we're trying to do. Okay. Now, maintain discipline. This is important. I'm going to go over the SPY super system, and then I'm going to go over the criteria that we use for finding the highest probability trade setups. That's the process that we have to follow. That's what's going to make you money. Following a process of high probabilities criteria to find those stocks. Right? Maintaining discipline means stick to that. Don't be switching off to a trade you saw on X or you heard about on CNBC or your brother-in-law's son's cousin told you about this thing. Maintain discipline. You believe me, you know as much about what the market's going to do right now as all of the analysts out there that keep telling you all the gurus that tell you what the market's going to do. They don't know anymore what the market's going to do this week or next week than you do. Right? So you got to learn and follow the process. Next thing is remaining patient, and this is the most important thing. Most retail traders have a horrible time trying to remain patient. If you're you like a stock and it's moving up quickly in the morning, you have this terrible urge to get in there and buy it. It's called FOMO, fear of missing out. It's caused by greed, right? You chase a trade. You don't wait for it to turn around and come back and find support and then bounce, which is the way you should be trading it. And this is why patience is so important. Wait for the trades to come to you, because if you get into a trade when it's ripping up and it's gone a long way away from support, believe me, it's gonna turn around on you most of the time, and you're gonna be trapped in that thing. And if you wait for it to go back to resistance, you're gonna have a pretty red P&L. Okay, so as a profitable trader, retail trader, we need edge. We need an edge over the other retail traders. We have four. All right, we have four. First one is our edges is a SPY Super System software. The software we have that tells us no video. Can you see the screen? Can everybody see my screen? I hope so. It's back. Okay, thanks, Fernando. I don't know why that would have done that. Might have been go to webinar. Okay, so we have, as a profitable trader, we need an edge over other retail traders. That's who we're going to be taking our money from. We're not going to be taking our money from institutions. Don't think that's going to happen. It's not. But our edge is the SPY Super System software that lets us know whether institutions are in the trade or not. This is our number one. And this is the thing that most retail traders have no idea if the institutions are in there. There's ways to determine if the institutions are in there up to a degree, but nowhere near as what you can find out with the SPY Super System. You know, if you look at our volume and price action, you can get some idea, but you don't know enough if those are institutions driving that. The next thing is we trade relative strength and relative weakness. Now, this is something that a lot of retail traders overlook. And this is not RSI. I'm not talking about relative strength indicators. Relative strength means if you've got a stock that's moving up, you're getting green candles, and the SPY is going sideways or going down, then that stock has relative strength toward the market, toward the SPY, and vice versa. If the market's going sideways and up, and you've got a stock that's stacking red candles, it's got relative weakness. Relative strength and relative weakness is really important, because if you take a stock long with relative strength of the market, it's outperforming the market. If the market reverses on you, that stock is going to hold up much better than the market is. So it puts you in a trade that you minimize your risk profile on that, because you've got relative strength or relative weakness in it. Very few retail traders seem to understand this. They look at MACDs, they look at the RSIs, indicators, etc. This is really important, and all you have to do is compare the stock you're interested in to what the SPY is doing right then. And most platforms will let you put both, the SPY and your stock on a chart, and you can see how it's operating. All right, then trading with the market trend, if there is one. If there's a market trend, today was a bullish day, right? So all the trades I took today were bullish. There were some decent short setups, but everything I took bullish. And the reason was because you've got the market tailwind behind you. You've got a better likelihood of making money if you're trading with the market, because obviously it's going to give you a tailwind. If you're trading short today, it's got to overcome, that stock is going to be very, very weak, because it's got to overcome the market bullishness, right? And then buy near support and sell near resistance. This is super important, right? This means if you're in an intraday trade, and we'll go over a bunch of these, if the stock breaks through a support level or a resistance level, such as the volume weighted average price or the 8 exponential moving average or the 15 exponential moving average, and breaks through there, you want to be in there as close to that support level as you can, that resistance level. As it breaks up through the resistance level, you want to get in as close to that as you can, because your downside is very minimized by the fact that you're in so close to support or resistance. If it breaks below, it goes against you, your loss is going to be very small. This is critical. Buying near support and selling your resistance, extremely important. These four edges right here will put you an edge over about 95% of the retail traders in the world. All right, I have to shut off the news feed. How do I know the market direction for the day? It can change. Yes, that's exactly right, CryptoCat. And you have to be watching your charts. But if you look at the SPY today, you can see the direction on it. Now, one of the things I'm going to talk to you about is an indicator that we have, which is called the market internals, which tells me what all of the S&P, all of the whole New York Stock Exchange, what those stocks are doing, how many stocks are going up on up volume and how many are going down on down volume, and I can have a good indication of whether we got a bullish or bearish trend in the overall market. But if you're looking at a particular stock, you're going to look at the 5-minute chart. But if I looked at the SPY today, you can see it opened strong. It had a few times when it was chopping around, but the direction stayed bullish most all day long. So I mean, obviously, it's not gonna go green candles every single candle. It's going to chop around, but you can certainly see the trend. Now, if you can't see the trend, if it's bouncing back and forth, for example, above the VWAP and below the VWAP, that's choppiness, and choppiness changes the way you have to trade, right? So now you don't have market trend to follow. You have to then take all the other criteria into consideration and ignore market trend because you're just looking for the very best stocks at that point. But that is after the fact. It's not really after the fact, because first of all, when I trade, I wait till 10 o'clock before I take a trade, right? I wait to see what the market's doing, right? The market trend, I mean, obviously it can reverse on you, but if you've got the market moving up and you know where your support resistance levels, for example, the VWAP, if the stock market's been going up all day, pulls back to the VWAP, bounces off to the VWAP and heads back up again, the likelihood is it's going to continue up because you've been in an uptrend. Just because you pull back with it doesn't mean the trend is going to change. But what you're trying to do is catch it at the right time, right? And then it can be tricky, but you have to make those kind of decisions by looking at price action. A lot of days are very choppy and there is no direction. So then you just have to lean on the stock. But if you're leaning on a high probability stock that's bullish for the day, and the market pulls back a little bit, that stock probably is going to still remain relatively bullish as long as the market doesn't collapse on you, and you'll be in good shape on that. Okay, so those are our edges. The compass system, which is now called the SPY super system, again, this identifies the highest probability trade setups while sidestepping setups that look good but will fail more often than they succeed. Again, that's the trade the best, skip the rest. It identifies when institutions are driving the move and when they're not, and I'm going to show you how that does that. And it analyzes complex trading data. Now it's looking at some fairly complex data, and it's displaying these results in an easily identifiable visual format. It's basically with colors, and I'll show you how that works. And this visual element is really important because it makes it possible for new traders who don't really understand technical analysis that much. It makes new traders be able to see high probability trade setups. They can tell when an institution is in the trade and when they're not. Okay. All right, and this is how do we get an edge over retail traders? Well, we've talked about this. Only take trades that are being driven by the institutions. Those are the ones we want to be in. We want to be following the institutions. Trade stocks that have relative strength or relative weakness versus the SPY or the Qs, and trade in the direction of the overall market trend, if there is one. Three things. These are very important. So again, our trades will be supported by institutional buying and selling. They'll be outperforming the index if we're going long, or underperforming if we're going short. And they'll be moving in the direction of your overall market if there is a market trend. Okay? All right. Now, before I get into the software, the SPY Super System software, and show you what it looks like and how it works, there's something I want to explain. I'm going to show you some of the results that we've had in the room over the last few years. We have an 85 to 90% win rate on our trades that we take in the room and on the alert service. And so, you know, it's easy to see those and think, well, this thing's pretty good. But I want you to understand why we have those results. And the SPY Super System software is the main reason for this, right? The SPY Super System software, it's the critical element in finding and trading the highest probability trades. The SPY Super System software is the engine that drives our exceptional results. When you see the results, 85, 86% win rates, it's the SPY Super System that's getting us into those trades that give us that opportunity. And the ability to identify when institutional players are driving a bullish or bearish move and when they're absent, this is the key factor in pinpointing the high probability trade setups. So that's the function of the SPY Super System software, and it's the critical component. This is the critical component. I'm not taking any trades if the institutions aren't in that trade. I'm not going to trade against the institutions. I'm not going to trade even if the institutions are neutral. They're not even in it. I only want to trade with the institutions. Okay, just a note that we do have Brightline has a YouTube channel. I'm on there every day at 11:30 to 12:30. For anybody who wants to see the room, I'll answer your questions. You can hear us discussion in the room. By the way, I'm in the room from market open to market close every day, except I take lunch. But other than that, I'm in there every day from market open to market close, and I'm answering questions. I'm showing charts of stocks that we're likely to take, showing strong ones, showing weak ones, answering questions. All our members in the room can ask me about a trade that they're looking at, and we'll analyze it. We'll analyze it through the SPY super system. We'll also analyze it by technical analysis. Okay. All right. So this I'm going to just run through quickly. If you're a trader, if you're a retail trader, I'm going to run through what I consider the most common retail mistakes that retail traders make, because I've made all of these. And I put a video out in this, which I thought was pretty entertaining, but pretty good. The main things here, this is what caused most retail traders to lose money. Not considering the current market conditions. If you get a bullish market, whether it's daily or on a 5-minute chart, and you're trading a lot of bearish stuff, then you're trading against the market conditions. You know, there was most of the gurus, a lot of people after this past April, when the tariffs went on and then the tariffs came off, they were freaking out, and there was so much bearish sentiment that not everybody, but a lot of people were trading the market short. They were shorting it because they thought the tariffs were gonna increase a huge amount of inflation. The market should go down. In other words, they were trading what they thought the market should do, not what the market was doing. So they weren't actually considering the current market conditions. We stayed long during that whole time because the charts told us to stay long. You know, we weren't listening to what everybody thought the market should do. Another thing, over trading. This is lack of patience here. You always feel like you have to be in a trade. You take way too many trades. You don't need to take a lot of trades to be consistently profitable. You just have to take a few good ones. That's all you need. Trading your P&L instead of the technicals. Technicals is basically reading charts. So if you get into a trade because the technical setup looks good, but then you bail on it because your P&L went against you, now you're exiting based on your profit and loss, not based on the technicals. The stock still should be a good technical setup. So this is a big mistake. Trading your P&L is a huge mistake. You should not even be looking at your P&L during the day for the most part. Trading what you think instead of what the price is. And this, I'm going to show you a little slide on this, but this is where you think that the market should be going down. You think the market should be going up. It's maybe opposite of what the market's doing, but you feel like you have this bias that that's what the market's going to do. So you take trades in that direction, even though the market's not going in that direction, and you stay in those trades because you feel like you're going to be right. This is a huge mistake, and it's pervasive. There's just so many people, because everybody's predicting markets. If you look at the folks who talk about stocks and the gurus, etc., they're all telling you what to think the market's going to do this week, this month, this year. Everybody's predicting, predict. But keep in mind, they don't know any more about this than what you do. Watch the stock market, watch the charts on the SPY and the Qs and the IWM, and trade what the market is telling you it's doing and what it's likely to continue to do, not what you think it should be doing. This is a killer. Over leveraged, obviously too much risk. Take too much risk. You're nervous when you put a trade on. You've got too much risk on. You can't stay in the trade as long as you should because you're panicking about losing money. Again, this is fear. Over leverage creates fear in you, which is an emotion. You're not using the daily chart for swing trades. Taking a trade that looks good on the 5-minute chart and ignoring the fact that it's bearish on the daily chart. You should never, in my way of thinking, you should never be entering a long unless the daily chart's bullish. And you shouldn't be entering a short unless the daily chart is bearish. Lack of patience, obviously we've talked about that. Forcing trades, this is related to lack of patience. This is where you feel like I gotta have a trade on so I can justify one. I hear this all the time, you know. They'll say, it's just a small position, it's a spec trade. What they're saying is they're gambling. So, you know, call it what it is. You're taking a gamble. You don't have any valid methodology for taking that trade. Attempting to pick tops and bottoms, this is a horrible thing. When you're looking for a bottom, you want the stock to bounce and you want to have it confirmed that the bottom's in and it's going to keep going up. So it needs to have a confirmation. Buying a stock because you think it can't go much lower is a very bad strategy. So I hear this all the time. You know, Microsoft can't go any lower than this. I'm going to buy some stock, but it hasn't bounced off the bottom yet. So again, attempting to pick tops and bottoms, very negative. Not waiting for confirmation to enter a trade. Again, this is a kind of goes hand in hand with that. If a stock comes down to a support level and puts in a double bottom or something and starts bouncing, and it's bouncing off the 100-day moving average, once you've got confirmation that it bounced off of there, now you have a new direction in the trade. Now you can take that trade long because you have a confirmation that that stock is moved back into the uptrend. And FOMO, fear of missing out, another. I mean, most of these are based on emotions, greed or fear. Market trades on greed and fear. Fear of missing out is if the stock's ripping up in the morning, so you grab it because you feel like you're losing money. Everybody's making money in the stock. I got to get in. I can't take it anymore. I got to buy it. And you buy it, and it turns around, heads right back down again, and now you're trapped in that trade. That's fear of missing out. So then you get greed, and then when it turns against you, all of a sudden that green quickly turns to fear. All right, I want to show this. This is about trading what you think instead of what the price says. And I really like this quote from Stephen Hawking, because remember, if you're trading what you think, you're taking what you heard somebody say or what you read somewhere. You're trading a bias. You're not trading this what the market's doing. You're trading a bias. And what he said is the greatest enemy of knowledge is not ignorance, not knowing what this market's going to do. It is the illusion of knowledge. And when you trade a market based on what you think it should be doing, based on what you read, saw, or heard, without actually taking the market direction into consideration, you are trading with the illusion of knowledge. You're trading knowledge that you think you have that you don't have, right? And that's trading with the illusion of knowledge, and it's a killer. It's an absolute killer. People got crushed this past spring by being short the market for 3 months, thinking the market should be going down, even though the market was going up for 3 months. And it's an illusion of knowledge. Just let the market tell you what you should be trading. Okay, now in the SPY super system, we've got, it's color coded. So this is how it tells us whether we've got, you know, how bullish or bearish it is. You get green, this green is going to be bullish strong. You got blue, this is a bullish trend. Red is bearish strong, and yellow is bearish trend. This is how we're going to identify what's happening with the institutions. Okay, and this is I've got a couple of charts here. This is the SPY super system on Thinkorswim. It runs on Thinkorswim and it runs on Ninja. I run it on Thinkorswim every day. This is the Thinkorswim platform right here. Now this is an older one. I'm going to show you a new one I've updated since then. But this is what it looks like on Thinkorswim. You see, it's all colors here. And I'll show you the new one here in just a second. But these are the indicators that we have on here, right? So this is what it looked like up to about 3 weeks ago. And I'll show you what we've changed it to now. All right, I've optimized it for clarity and precision, and I've added the 8 exponential moving average here that wasn't there before, and provides improved signal confirmation and trade timing for both entries and exits. Okay, so this is what it looks like now. This is what there'll be the scans and everything off to the side, but this is what the actual chart looks like on Thinkorswim, and this happens to be a 5-minute chart. And these are all the things that you need to determine if an institution's in the trade and take a trade. Right down here, this is what's called the modified Laguerre oscillator. Now, most oscillators measure momentum and divergence. This modified Laguerre oscillator has the divergence is stripped out of it. This is pure momentum, right? This is telling us what the stock's doing based just on the momentum. This is the current time frame momentum. This shows me what the stock is doing on the current time frame that we're in. Now, if it's on a 5-minute chart, this would be a 5-minute momentum. If it was a daily chart, that would be a daily momentum. If it was a 2-minute chart, it would be a 2-minute momentum. But right here, it's a 5-minute momentum. So this is the current time frame. This tells me what the momentum is right now on whatever I'm looking at, which happens to be the SPY here on a 5-minute basis. This is the multi-time frame momentum. This is very critical when you come into a swing trade. When you're looking at a swing trade, you want the current time frame momentum and the multi-time frame momentum to be aligned. You want them to be both bullish or both bearish, right? So they need to, if they need to be either both green or blue, or red or yellow. It doesn't both have to be green. One could be blue, one could be green, but as long as they're both bullish. If you've got a daily chart that has green on one and red on the other, you don't want to trade. You don't have the institutions confirming in that. And what the multi-time frame momentum is made up on a 5-minute chart, it's might have maybe 5-minute, the 15-minute, and the 45-minute. So for this to be green over these, it needs to be those three time frames all need to be going in the same direction, momentum-wise. All right, and this is the long-term trend. This is also effective more so for swing trades than intraday 5-minute trades. Right now, up here in the pricing area, we got the candlesticks. Key thing here is the VWAP. That's the volume weighted average price. This is on the 5-minute chart. It doesn't apply to the daily chart. This is what every institution uses, the volume weighted average price. This is a massive support and resistance level. This is something that we use all the time when we're taking intraday trades on the SPYs, the Qs, gold, Tesla, Microsoft, anything we use. If it's breaking above the VWAP and it's green down here, it's got a bullish trend. That would be an entry right here, volume weighted average price. The other two support resistance levels that are on here is the 15 EMA, which is right there, I got it indicated, and the 8 exponential moving average. All three of these lines can be used for entries for trades, both long and short, right? The 8 and 15 is, I like a lot because I usually take the 8 and 15 together in combination, because when a stock breaks down below the 8, many times the 15 will hold, right? So that's why when I take a breakout through the 8, I wait for it to break below the 15 before I take it off. I give myself a little extra room. And the 8 and 15, when the 8 is moving up and the white line here, the 8 exponential, is above the green line, that's a bullish trend, right? When the 8 sinks below the 15, you see how it broke through it right here? That is turning into a bearish trend. When the 8 exponential is trading below the 15, that's a bearish trend. Now, in this case, you wouldn't take it here yet because it's sitting right on the exponential, the VWAP. But if it breaks through here, breaks below here, you definitely would have a short entry. Breaking below the VWAP with the 8 below the 15 and both moving down. Right, so those are the levels that we use for support and resistance levels for our intraday trades, especially on the 5-minute chart. Daily charts, we're looking at the same kind of thing. We're looking at the moving averages, but there's other moving averages on the daily chart that come into play for swing trades. Okay, so those are the three. Now we also have these pop signals right here. They're called pop signals. You get blue. These are compression breaks to the downside when they're blue, and compression breaks to the upside when they're pink. That gives you it helps you with your entry, because if a stock is breaking out and it's also got popping out of compression and you're breaking above your support resistance levels, that's a tremendous entry. It may only be good for a couple of candles, but it's a tremendous entry right there. Okay, so that's a nice one. We're going to look at a bunch of these charts. And the other thing we have on here is what's called this trend up. This is called the VOLD, the VOLD. This is a market internals indicator that tells us what's happening with all the stocks in the whole New York Stock Exchange right now on a 5-minute chart. And it tells you that it's trending up. It's blue, it's not green, but it's trending up. That means there's a lot more volume on stocks going up than there are on stocks going down. So it tells you the momentum is very strong on the whole market. So it helps you to decide if you want to stay in a trade or take a trade long. I mean, if the trend has been up all morning, obviously you'd like to take the trade long. If it's been chopping around, if it goes blue and then red and then blue and then red, it's just chopping around. You know that you got to get in out of these trades pretty quickly. Okay, I just want to show you a couple of trades we've taken recently using this and how we find these trades. All right, so this is NVIDIA. This was in 1024. Now you see how it's kind of moving here. Now you see how the colors down here. This is the 5-minute chart. This is the current time frame momentum. You see how it's red right here, and it switches to blue. Okay, so this is the institutions going from selling to buying, right there on that candlestick, right there. Now you see where we've got a pop out of the box. That tells us that the compression's breaking. This stock is breaking to the upside. It's breaking above the VWAP. It's also breaking above the 8 and the 15, and it's got a pink candle here. And this is the perfect entry for NVIDIA. This is where we took it. We took it right here on this break above the VWAP and the 8 and the 15, and we rode this thing up until it started to flatten out right up here. We just get out here. But this little move right here is on a calls from NVIDIA is worth a lot of money. Probably over $2 for $2 to $2.50 or $250 per contract on a move like that. But you can see that it went from selling to buying, popped over the VWAP, pop out of the box. Everything is exactly where you want it to be right now. right? So that's where we took that trade. And this was a short we took in the SPY right here. Okay, so this is where we took it. You see how the VWAP's right here? See the SPY breaking down below it? See the pop out of the box symbol? See what's happening right down here? We went from buying, which was green, to selling, which was yellow. This is where you take the trade right here as it breaks down. Could have taken it here, could have taken it here. And this is where you would take this trade. Now, as long as this stays yellow and red, it's continuing to be short. The institutions are selling. So you stay in this. And you can obviously use your own judgment when you want to take the trade off. In this case, I took it off as it flattened out right here, in case it was trying to bounce back up again, because I had plenty of profit in it. But that's showing you the institutions went from buying to selling. It broke below the VWAP. You get in at a beautiful support resistance level. That's a nice trade right there. Okay, this was one on the SPY to the upside. All right, so here we have the SPY trading below the VWAP. It's going back and forth, blue, yellow, blue, yellow. And it goes to blue right here and breaks above the VWAP. Here we go again, breaking right above the 15 in the VWAP with a pop out of the box symbol right there, that arrow. This is where you take it long and you ride this thing up. These are 5-minute candles. So you get 1, 2, 3, 4, 5, 6, 7, 8 candles. That's about 40 minutes of trading. And as soon as you start to get flattened out here and you start getting little candles, you take profits. You didn't have to because you noticed it stayed green down here. You could have waited till it got yellow. But when you're in a trade this long and you've made that much money on it, I would suggest taking profits, at least certainly taking part of the profits. All right. And again, this is a Tesla trade here that we took early in the day. I usually don't get in that early, but this was a trade we took early on because it popped up. See the buying popped up in the morning. We took it here, stayed above the VWAP, and he wrote it up. And as soon as we got a red candle, we get out. Okay, and notice it stayed green here. It's still being bought. All right, and this was a swing trade. This was an NVIDIA swing trade. As you can see, the institutions are buying this, right? It's not hard to see the institutions are buying it. Current time frame momentum, which is daily. This is a multi-time frame momentum. This is 1 day, 3 days, and 9 days. This is the 3 different time frames that are showing momentum by institutions on that particular stock. And then the trend was also long. So what we did here was we didn't chase it here. We waited for it to come back to the 15 right here, the 15 EMA. And we don't use the VWAP on the daily chart. This needs to be removed. Right here, we took the trade right there as it pulled back and bounced. It's called a PBO, a pullback opportunity. As the stock pulls back to the 15 and bounces, you take it right there. So we took it and we got out right here. In at 8.4, 8.07, out 8.7, 32%. And you see how it stayed green the whole way. Institutions buying all the way across. This was an SMR trade we took long. This was earnings. See how it was yellow, bearish, went to bullish right there the next day. We grabbed it right there. And again, we get in on 513 right here. And we get in out at 515, 56% profit for 2,000 invested. I use the 2,000 invested just as a baseline. I've got to have something I can use to basically quantify how we're doing profit-wise. So I use $2,000 for each trade. Right, but that was $1,170 profit on SMR. It's one of those little small nuclear companies that was so profitable early on. They kind of pulled back recently. This was Wendy's. We took this one right here. Here's earnings. We took it right here as it broke. We just took this as an intraday trade. We could try to do a swing trade, but we made so much money on this candle. We took profits in it. Right. So, but you can see here that it's red, red, red. Institutions selling, selling, selling. All right, so those are just kind of what some of the charts look like. I'm going to go through some more of these, but I kind of wanted you to get familiar with the color schemes and the what we're using for indicators. This is just a little levity here. This is a trader who's trading emotionally. Maybe he hit into a trade with FOMO in the morning and it's just turned around against him. Maybe he took a trade long that he should have been short and it went against him. He doesn't know what to do. You didn't have a methodology or a strategy. And you're basically frozen. You know, it's very difficult trading with emotions. We want to trade with as little emotion as possible. And this is what happens if you've actually got some sort of methodology and strategy you can follow. Because listen, not every trade is going to be a winner. Let's be honest, some of the trades are going to be losers. But if you've got a strategy that you know is going to win 80, 85, 86% of the time, you can be confident that if you have a losing trade, you're going to have a lot more winning trades. And and again, you're exiting when you should be exiting. Okay, CryptoCat. What criteria did I use to find those SMRs in Wendy's names? There's scans. I have scans on the SPY Super System. I also use TC2000, which is a charting scanning program. And I don't remember where I got them from, but most likely I got them from either one of my SPY Super System trades or scans, or one of my TC2000 scans. I've got a lot of different scans. I look for different criteria: Heikin-Acher reversal candles, breaks out of compression, a lot of different ones. And then I compare them to make sure the SPY Super System is telling me that the institutions are in there. Okay, and this is something I put in here again. The process precedes results. What this means is learning the strategies, learning the criteria and following the criteria is going to come before your profits, right? If you're trading and you're judging whether you're a consistently profitable trader based on whether your P&L is good or not, you're looking at the wrong thing, because there can be a lot of bad trades that you can make profits on sometimes. But if you do them over and over again, you're going to lose money on them. And there's a lot of good trades that will go against you. So learning the high probability criteria and strategies has got to come before focusing on your P&L. The P&Ls will follow once you have the strategy down and you can follow it. All right, that's the most important thing. So focusing on P&L results without having a solid process to follow is going to end in failure. All right, so this is a high probability trade setup funnel that I go through. This is a virtual funnel. These are the things that I look at when I'm looking at a trade. Look at a stock. If I'm going to take a swing trade, I look at the daily chart first to make sure the daily chart is bullish if I'm going to go long. If the daily chart is not bullish, I'm not going to take a swing trade on it. Now, I could take an intraday trade on it, but I can't take a swing trade on it. So if the daily chart is bullish, and then I look for the 5-minute alignment on the daily chart, to find the best entry. In other words, I'm finding a 5-minute chart that the stock is bottoming out and heading back up again, and the daily chart's long. That's fine. That's what I'm looking for. Okay, I just don't want to trade against the daily chart for a swing trade. Intraday trade is okay. I trade with the trend, both stock and market. Obviously, I'm looking for a stock. If I'm going long, I like a stock with a bullish trend. And if the market has a bullish trend as well, that gives me an extra edge, right? Then I look at the SPY Super System. This has got to align. If I'm going to take a trade and I'm going to be long, then that SPY Super System has got to tell me that the institutions are buying it right now. If I'm going to be short, they've got to tell me that the institutions are selling right now. And this is true whether I'm doing an intraday trade or a swing trade. If I'm doing an intraday trade, I'm only going to be interested in the current time frame momentum. That's it. Just the current 5-minute momentum. That tells me how I'm going to trade the SPY Super System for intraday trades. For swing trades, I look at the daily chart, and the SPY Super System has got to show me a bullish current time frame momentum and a bullish multi-time frame momentum for a long, and vice versa for a short. If this doesn't match, this doesn't tell me that the institutions are in there, I'm not taking the trade. I'm not taking it at all. Then I look for relative strength and relative weakness that we talked about. If you've got 3 or 4 stocks that look good, I would suggest taking the one for a long that's got the best relative strength, and vice versa on the shorts. And then enter near support and sell near resistance. Again, wait for the stock to come to you. You can set alerts on your charts if you want to enter at a particular level, so that when it gets there, you'll know about it. Okay, these are the strategies that we use in the room and in the alert service. We use straight calls and puts. We do straddles and strangles. This is a non-directional trade. We're just looking for a big move up or down. We don't care which way. It's a fairly effective strategy, especially when the market's volatile. I do debit spreads using weekly options expirations. Time spreads over earnings. This is a non-directional trade where we capture what's called volatility crush. When earnings are coming out, the market makers jack up the premiums on the puts and the calls because they don't know which way the stock's going to go and how far it's going to go. So they cover themselves by increasing the volatility, and that increases the premium on puts and calls. We have a method that we use to do what's called a calendar spread or a time spread, where we sell current week's calls at the money, buy next week's calls at the money, and that way we capture the volatility crush as soon as earnings come out. Very, very, very profitable, works well. Again, about an 85% win rate on this one right here. Weekly ATM strategy. This is a strategy where we sell puts every week on a neutral to bullish stock while holding a much further out in time put. all right, to protect ourselves. So our downside is protected, our margins are reduced, and if you can get the correct stock. It's all depends on stock setup, and these are very important. The particular stock setup that you have, the criteria for the stock you pick is critical for which strategy to use. And we do credit spreads to capture premium over a few weeks. And we also do what's called the SPY Super System methodology on the 5-minute chart. This is where we're trading intraday trades on the SPY, the Qs, the IWM, the futures, even stocks, gold, whatever you want to trade, oil, Tesla, doesn't matter. This just works off of high probability trades using the 5-minute chart. Now, I can't post any of these in the room, and I can't alert on these because they're very quick. Most of these will last maybe 1, 2, 3 candles, maybe 4 candles. But this is a high probability trade, and I'll show you how we use that as well. Okay. All right, and the alert service, by the way, it's designed for day trades and short-term swing trades. This is not for investments. This is day trades for short-term, from day trades and short-term swing trades. It's designed for traders who can't watch the market all day or don't want to. It's going to give you real-time alerts on the highest probability trade setups that we can find. And the highest probability trade setups are done by identifying institutional involvement. Institutions got to be in the trade. Then we look at the market internals, the one that I showed you, what's the market doing for all the New York Stock Exchange, and then we do technical analysis. This is how we find the very best trades. And it's not a lot of them. I mean, it's not a lot each day. This is my equity curve for this year. This is based on $2,000 per trade for all the trades that we took in the room right here. All right, so I'm going to talk now about Fibonacci candles. I assume some folks here were interested in seeing some Fibonacci candles. So I'm going to talk about Fibonacci candles, how they're constructed and how you can use them. And I'll show you some live trades using Fibonacci candles from today's trading, where we can find some potential swing trade setups for looking for high probability Fibonacci reversal candles today. All right, so here we go. This is a chart. It doesn't matter what it is. This is British pound, Japanese yen. It's FX. It doesn't matter. It's what we're interested in here is the candles, right? What the candles look like, right? So these candles right here that have flat tops, these are Fibonacci bearish candles. Fibonacci bearish candle has flat tops. They can have tails, but there's no wicks on them. You notice flat top, flat top, flat top, flat top. These are Fibonacci bearish candles right here, right? Now you notice on a Fibonacci candle that it starts in the middle of the previous candle, right? It's a little bit odd from what you're looking at regular candles, but it always starts in the middle of the previous candle, all the way down. This is a bearish Fibonacci trend right here. You can see the flat top candles, and the candles are pretty big. So what we're looking for, let's assume we're looking to go long the stock when it hits support and bounces, right? So we watch it coming down. So now we're going to look for a reversal on these Fibonacci candles to the upside to get back into the trade. So we start getting wicks and tails here. We start getting green candles, and then we get a Fibonacci reversal right here. See the flat bottom? A flat bottom candle is a bullish Fibonacci candle, right? Bullish is because flat bottoms, bearish have flat tops, right? So this is a bullish Fibonacci reversal candle here. Now, theoretically, you could take a trade right here, but I'll add a caveat to this. When you have a downtrend that's this strong, these big candles, you don't really want to take the first reversal if the candle is small. And that's a fairly small Fibonacci reversal candle right there. So you would have made money on it because it went up for 3 or 4 candles. But I would be looking for a return to the downside and then getting a big Fibonacci reversal candle right here. This is the one you want to trade. See how big it is? Compared to these are too small. This is a beautiful Fibonacci reversal candle. Now, here's a little point of information. When a Fibonacci candle starts to develop, let's say you're on a 5-minute chart, after about 2 minutes of 2.5 minutes of trading on that 5-minute candle, if you've got a Fibonacci candle with a flat bottom, it's likely, very likely, to stay with a flat bottom before when that candlestick ends, after that 5 minutes. So you don't necessarily have to wait for the Fibonacci candle to fully develop before you can take it, right? As long as you got it 2 minutes into a 5-minute trend or something, it's about 95% chance that it's going to stay with a flat bottom, right? So here's your trend. Here's your Fibonacci reversal right here. You take it here, it moves up, right? Flat bottom, see in the middle of the previous one, flat bottom, flat bottom, flat bottom. This is a nice Fibonacci reversal if you're in this trend, that's a beautiful trade right there. This is where you get out. We're getting wicks and tails, and then you get a red candle with wicks and tails, you're out of the trade. Okay, so that's what a Heikin-Ashi bullish candle looks like. So a Heikin-Ashi bearish candle looks like. Right, so these are the distinctions from regular candles. And Heikin-Ashi candles, it takes 2 candles to make a Heikin-Ashi candle. It's looking at two different, like if you're looking at a 5-minute, it's got two different 5-minute candles to create that candle. So bullish Heikin-Ashi candles have flat bottoms. Bearish Heikin-Ashi candles have flat tops. Critical to this is what you want to know. You want to remember this. Bullish Heikin-Ashi reversals are identified by flat top Heikin-Ashi candles, followed by flat bottom Heikin-Ashi candles. Now there can be dojis and everything in between, but that's what your reversal looks like. And bearish Heikin-Ashi reversals are identified by flat bottom Heikin-Ashi candles, followed by flat top Heikin-Ashi candles. Those are your reversals, and this is mostly what I use them for, is finding a reversal or a confirmation of a reversal by using Heikin-Ashi candles. All right. So again, this is kind of what we looked at just a bit ago. Now, if this is a chart here with Heikin-Ashi, let's say this blue line right here, let's say that's the VWAP. That's one of the levels we want to get in as it breaks above that, because you're looking to go long here. So you see it coming down bearish, and then it pops up, and it comes up to, for example, the VWAP right here, and then you get a Heikin-Ashi reversal candle right there as it breaks through it. That is your entry into this trade right here, as it switches to a Heikin-Ashi bullish reversal with a flat bottom after having flat tops. And then you take it and you get flat bottom after flat bottom after flat bottom. You get a red candle, you got to keep your eye on it, but you're still above your entry level here in the VWAP. And then you just ride this thing up. That is a nice bullish trend. Now, once you start getting wicks and tails up here and then a red candle, you're out of the trade. That's your trade right there. That's a Heikin-Ashi reversal candle with a Heikin-Ashi bullish trend. And that's how you take advantage of these things. All right, so the recap of Heikin-Ashi candles, I'm going to show you a few on the daily chart. It smooths out price action, reducing noise. If you're looking at regular 5-minute candles, you get a lot of movement. When you're looking at Heikin-Ashi candles, that movement's been put into 2 candles, so it tamps it down. You don't see, as again, if you look at it here, you can see how smooth this is. Looking at regular candles, it's not going to look like that. And I'll show you some charts that'll show you that. It makes identifying trends much easier. It improves identifying confirmation of trends or trend reversals. This is a big deal, confirming a trend reversal. And then it helps identify potential exits when the candle bodies shrink or the reversal occurs. I will tell you, when I'm trading Heikin-Ashi candles, when I'm thinking of getting out of a trade, let's say I'm reaching about where I want my profit target to be, I'll switch to regular candles and get out as soon as I get a pull down on a regular candle, so I don't have to wait for the Heikin-Ashi reversal to form, because I'd have to be waiting for 2 candles for that to happen. So I'm getting out of my trades a little quicker than if I use the Heikin-Ashi candle to exit the trade. Okay. All right. So this is a chart of Uber. All right. This is Uber. Now this is a regular chart. These are normal candlesticks. And I want you to. This is an old chart, but I want you to see. This is May 1st right here. Okay. You see here the stock's coming down. This is the 200-day moving average. This is my TC2000 chart right here that I use for my scanning and also for my charting. But see how it gapped up right here on May 1st. All right, so this is a regular candlesticks. Gap up. Very difficult to try to take it on a big gap like that. Typically, you want to wait for a pull down. But if I switch to a Heikin-Ashi, look at May 1st. Here's May 1st right there. This, you see this Heikin-Ashi, these Heikin-Ashi flat tops right here? That's a bearish Heikin-Ashi trend. See the Heikin-Ashi reversal candle right there with a flat bottom? See how big it is compared to these? That is your entry right there. That's your entry. On May 1st, you would be taking this trade, and then boom, boom, boom. Just keeps moving up with flat bottoms, flat bottoms, flat bottoms. Then it starts to peter out. This is where you get out of the trade. But if you would have got in on March 1st, this is where you would have caught it, right here. Because this is the day that Heikin-Ashi candle get created. You take it right there in the 1st, you would have caught that gap and all of this move. Okay? That's and again, notice that Heikin-Ashi candles, there's no gaps in them, right? There's no gaps in them. Paulie, there will be a replay of this webinar. Everybody who signed up for the webinar will get a copy of it. All right. So again, no gaps. All right. So I'm going to take a look at some live Heikin-Ashi candles. in reversals here. Now I've been trading all day, so I haven't actually had a chance to identify some. So I'm gonna use one of my TC2000 scans to find some Heiken action reversals on a daily chart and show them to you. All right, so just give me a second here and I'll do that. All right. Okay, so, and I'm going to move my, first I'm going to move my TC2000 chart over here because that's where I'm doing the scan on this, and then we'll take a look at them on these by super systems. All right, so these are some of the ones that have popped up on my chart right now. All right, so this is Excel. This is a biotech here. It stuck up as it came up on my Heiken-Achi reversal. So if I go down here and I switch to my Heiken-Achi, this is where I'm seeing what I'm getting here. See the little candles and then a big flat bottom candle. This is basically a Heiken-Achi continuation on Excel. Okay, yeah, Excel looks pretty nice right there. So if I was thinking of trading Excel, what would I do? Well, how would I know if I want to go long on this? So what I'm going to do is I'm going to switch over to my SPY super system, and I'm going to switch to a daily chart, and I'm going to put Excel in there. I want to see what it looks like. All right, so I'll put an Excel right here. Oops. Again, I'm kind of doing this on the fly, so. Okay, so here's EXEL. So what do I look like? What do I look for here on the SPY super system? Well, remember, I want to take it only if the current time frame momentum and the multi-time frame momentum are both bullish. They are. I've got a bullish current time frame momentum on the daily, and I got a bullish multi-time frame momentum on the bullish. This is a nice little breakout. That becomes a candidate to trade long. All right, it becomes a candidate to trade long. Let me see if I can find a couple more. Okay, TSM, Taiwan Semiconductor, right, is also a Heiken-Achi reversal candle. All right, so I'll look at TSM and let's see what it looks like. Do I want to trade this long? I do not. You see the current time frame momentum is blue, right? But the multi-time frame is bearish here. All right, so and I do have a Heiken-Achi reversal candle on it. If I show it to you here on TC2000, there it is right there. But if I saw that it came up on my list, I'm not going to trade it long because it does not have institutional buying in there yet. Okay, that's what I'm looking for. All right, I'm looking for something like that. I'm looking for Dollar Tree. Dollar Tree is another one. Dollar Tree look good? Yes, it does. We're getting a nice break in Dollar Tree right here. And if I switch my super system to Heiken-Achi candles, which I can do very easily, I just switch over to Heiken-Achi on TC2 on TOS. There it is right there. There's a Heiken-Achi reversal candle after this down move. Beautiful, beautiful setup. Dollar Tree becomes a potential long. Right, so that's what I'm looking for with Heiken-Achi candles. Right, there's quite a few of them. Some of them are going to be good. Some of them are going to be poor. I mean, I get Alta, but what I'm emphasizing is once you find a Heiken-Achi candle, make sure that the SPY super system is telling you that the institutions are in it, because the Heiken-Achi reversal is giving you the candlestick reversal technically, but you've got to know that the institutions are in there. Otherwise, it's not going to have this higher probability of success. So this one I wouldn't take, even though it has a Heiken-Achi reversal candle. I'm not going to take Alta because I've still got the multi-time frame momentum telling me bearish. Okay, so that's how I find those. And I have scans that do those. And if I look for some shorts, I can find some shorts as well. All right, so I looked at, let's see, that's a pretty big one. PD, some of these were earnings today. Right, TMUS is another one. All right, so here's TMUS. So what's TMUS look like? It's been a downtrend here. It popped up, this Heiken-Achi reversal. Now we're getting a Heiken-Achi reversal to the downside right here. Flat bottom, can I take it? I can. I can take TMUS short right here. It looks pretty good. And if I look at it on my charting program on TC2000, it looks good to me. All right, I've got some room to the downside. That's what the regular chart looks like right there. All right, so that's what I'm looking for on Heiken-Achi candles. You're looking for the reversals on the daily chart for swing type trades. And you can look for the same thing on 5-minute candles. Obviously, during the day, you can look for Heiken-Achi reversal candles on a 5-minute candlesticks to take a quick intraday long or a quick intraday short if it's breaking through resistance or support levels. All right, so that's what they look like. And again, there's tons of them. ZS is another one. See that big? This is continued. This is considered a continuation. See, this is a Fibonacci reversal down here. Then you get a couple of small candles. This is a reversal. That's a good short. Z-scaler is a good short for Friday. I mean, it's a very good short. This is what it looks like on my TC2000 chart, where I have my 200-day moving average. It's fall below it. Look at the volume coming off of earnings. It's a decent short setup. So you wait to see what it looks like on Friday. If it opens red, you can take it short. Okay, so that's what I look for on Fibonacci candles. I'm looking for 5 minutes and I'm looking for daily, but I've got to have the SPY super system tell me that that particular stock meets the criteria I need to go short or go long. All right, so that's how we use Fibonacci candles. All right, so we looked at some of those. All right, so that covers the format of the SPY super system. I'm going to show you some quick trade results. I'm not going to spend a lot of time on these trade results. There's just a couple of things I want to point out on the SPY super system trade results. These are just recaps of 2023. 2,000 invested in each trade in the room. If you took every trade, produced about 60 grand, 5,000 a month. 2024, 55, about 45 a month. And remember one thing about the profits that you make. A lot of it is dependent on what the market's doing. If the market is trending on a daily basis or even on a 5-minute basis, you're going to make more profits than you do on a choppy market. All right, so that has an impact on that. This is 2025 through September. This has been our best year so far. We're actually up over 50,000 now, and 5,307 per month, which is the best month we've had, as you can see, 5,045 and 5,307. Okay, so that just kind of gives you a recap. This I just threw in here because I wanted to highlight when the market was bearish in April, when they were talking about putting the tariffs on. We only had 4 trades on these. We had these in the room, and we had these on the alert service. Broadcom, Nike, Sarepta, and NNE, right? And we were short all of these. We entered on Broadcom at $75 a contract. We earned 104, 39% profit. Nike, they put the tariffs on Nike. We had Nike short when they put the tariffs on, and they were supposed to have a 39% tariff in Vietnam, which is where they make all of their product. So we get in for this for 285, and we were short, and we held it for a few days, and we get it at $9. That's 216% profit. Now this is very large, and don't think that this is normal, because it's not. 216% is very unusual. But anyway, this was a big move, and these are the only 4 trades we had on. We were short in the room, we were short on the alert service, and the SPY was down 10% in 2 days during that particular period of time. So I was kind of proud of that trade. So I just wanted to point that out. All right, so this is I'm going to kind of recap trades quickly. The thing that I want you to kind of look at here is this was June of this year. I didn't have many trades. I was on vacation for a couple of weeks. 11 trades, 10 wins, 1 loss, 91% win rate, made $37.90 on the trades. But notice the percentage gains. We don't have 200, 400, 600. A lot of places will tell you how much you can make on each trade, and it's in the hundreds of percentages. That's not true. You know, we grind out 20, 23, 25, 40%. This is typically what you're going to see on the trades that we take. You're going to get 20, 30, 40% on most of the trades. In July, we had a lot of trades in July. But you can see the percentages don't change a lot. 40, 20, 32, 52. We did have 166 on Sarepta, but generally speaking, they hung right around here about the 25, 30, 35%, right? And July was a big month. 30 wins and 3 losses. This is the best month we've had this year. That's a lot of trades. 33 trades is a lot of trades for us in a month. But 91% win rate, and 2,000 invested in each trade produced about almost 17,000. All right, August, 20 wins and 4 losses. I want you to see the win rate, again, keeps remaining in between 80, 82, 84, 86%. September, we had a decent month of September, 21 and 4, 84% win rate, 4,744 profits. But again, see the percentages. We have some, and we have losses. Remember this, we have losses. Let's be honest about this. Everybody has losses. All right. So I'm not going to go back all the way to 2024. This was January, but again, you can see the percentages. We had some nice wins in January. February was a very nice month. But again, I think you get the idea of what we're talking about here as far as percentage gains are concerned. Okay. Because May we had some time spreads. A good month, very good month. June was a decent month, you know, 75, 90. The alerts actually made more in June than the room did, but in 25 and 4, 86% win rate. July was good. I do want to point out September last year, this was my only losing month. We had a losing month in September. I want you to be aware of that. We lost 1786 in the room, 295 in the alert service. Again, in August, we had been up 45-35, and the alerts had been up 24-62. So this was a weak month for me. 8 and 5. This is an embarrassment for me. 62% win rate. It's embarrassment. But it is what it is. That's all. We didn't have a lot of trades we could take. We had some go against us. There was some news events that caught us on deer. But then we bounced to October and we went to 17 and 3 and 74.48. So that's how it went. And I'm not going to run through every one of these. Again, this was this year, 2025. But again, 84%, 89%, 83%, 81%. See the number of trades. Yeah, I have around 20, 25 trades or so a month. Now on the alert service, what you're going to get here on the alert service is you're going to get an alert. Obviously, you're going to get an SMS to your phone. It's going to have the date of the trade. It's going to have the stock symbol. This was Nike. This was a Nike trade. It's going to tell you to buy the April 11th 67 puts. So that is buying the April 11th. That means you're getting calls, right? Well, puts. You're buying puts. So you're buying April 11th 67 puts. April 11th is the expiration date. 67 is the strike price, and you're buying puts. So we're going to be short this, and you get them for 285. That's the entire alert you would see. Then you would get another one that's going to tell you the same thing, and it's going to say sell order, put a sell order in for $9. Then you're going to get another one that's going to tell you we sold it for $9 on April 3rd. There could be others. If we change it from 9 to 950 or 9 to 850, you could get another alert. Right? So that's what they're going to look like when you get them on your phone. Again, we sent one out today on Apple. We haven't sent one in a while because the market has been not conducive to making swing trades. All right, so how do we achieve these stunning results? I'm just going to whip through this. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. We've already talked about this quite a few times. And we only take trades when both of these are in our favor. I will take trades if the institutions are in the trade and the market internals are neutral. I just won't trade against the market internals. And it does it by looking at triple screen assessment. Again, we've talked about momentum, we've talked about trend. It also looks at some money flow in there, but what you're interested in more than anything is the momentum. Okay, so I'm going to run through these again, some of these charts, just so you can see them in case you have any questions on these, so you can understand why we're taking them. Again, here is the actual chart. This is on Thinkorswim. Here is the modified Laguerre oscillator, current time frame momentum, multi-time frame momentum, and long-term trend. That's all you need. For 5-minute charts, all you need is this, current time frame momentum. That's it. Here's your VWAP, support resistance. Here's your 15, support resistance. Here's your 8, exponential moving average, support resistance. And your pop signals. And there's your market internals. That's everything you need all there on one screen. Right? And this is if you buy the software, you also get this template. You can swap them back and forth. This is for just folks who just want to do the SPY super system trades on a 5-minute basis. They're only interested in doing quick trades. They're not looking at swing trades. Then you can have this particular template right here, right, which is for the SPY super system trades. Right, so you got the current time frame momentum, and you've got all the indicators that you need. The 8 would be on here as well. All right, so this was a trade we took on the SPY super system. This was a high connect reversal right here on the Qs. Came right down off the 15 right there. Right, take it right there, and it stays above the 15. That's the 15 right there. See, it stays below the 15. The institutions are selling. You notice how when we took it, they went from green buying to yellow selling. Take it right there. We ride this thing down, and you could just stay in this as long as it stays below the 15 and take profits whenever you want. This was a very long trade, and you can see that it stayed bearish the whole time. All right, the SPY super system, I'm just going to talk about this. This is for folks who trade intraday. Most of the SPY, the Qs, the IWM, but you can also do it on stocks, Tesla, etc. A lot of things that you can trade off of this, looking at those 5-minute charts that we were looking at. But these are the results I've had for the SPY super system. I can't post them. I can't send them out on alerts. So this is the results I've had since July of 2024. But we put this into effect. But you can see there's a lot of trades, and they're very quick. All these trades, you only have one on at a time. They're going to be very short duration. 1 candle, 2 candles, 3 candles. But this is the results I've had. I've never had a losing month with this. I just had on Monday I had 6 SPY super system trades that were all profitable, and I wasn't in any of them for more than 15 minutes. We got a lot of people in the room that use it, but I just want to point out how well this works. All right, again, these are my results. This was October, November, December last year. I want to make clear the SPY super system, which is taking these quick 5-minute trades on the indexes. Right, this produced $4,831, 33 wins and 4 losses. The room itself, if you were in the room and you took these trades, you would have made this. Right, this is what you would have got if you took all the trades, roughly. But this is what I made. I can't tell you what you would have got here because I can't post entries onto them and exits. Right, but this does not include this. This does not include this. These are completely separate strategies with completely separate P&Ls. Okay. And this was November. Again, another nice month in November. December, another nice month. Again, the SPY super system was producing really, really good results, and it continues to do that. So this was the 4th quarter of last year. I mean, but again, you may not be doing this. This is what I did, but this is what the room produced in that quarter, right there. Okay, at $2,000 per trade. Okay, so here's some more. This was another SPY super system trade right here. You notice that current time frame momentum. This is an old chart, so I'm going to skip that. So here's one here. Again, how it breaks down. It goes from selling to red right here as it breaks down with a pop out of the box symbol. You take it right here. Out 1 candle. I was out on 1 candle on this thing. $90 profit per contract. Another one right here. And this was using just the current time frame momentum. Okay, as it breaks down, boom, boom, and out. Again, this is the new SPY super system tablet. Again, if you buy the software, you get both of the regular, they get the templates. This template and the normal template that has everything on there. Okay, this was a nice, beautiful SPY super system trade here. Again, it was red here, the current time frame momentum. This was an older one. I didn't have the gear down here at the time, but there it is. It's red, and it's breaking below the VWAP. You can see how it breaks below the VWAP, and you get a pop signal. You take it right there. You write it down here. $120 profit per contract. All right. Now I'm going to show you some swing trades that we've taken so you can see how we use it for swing trading as opposed to just 5 minutes. This was a lot. This was going to be a swing trade, but we made so much money on it in the intraday that we took it off before overnight came along. We took it right here. See that it went from buying to selling right there, right? Buying to selling right there off the VWAP. We took it there. We rode this thing down for an hour, and we had a 51% profit in these puts that we had on, which were out in a few weeks in time because I was planning on swinging it. But we took 51%. I didn't see any reason not to take it off. So we took the profits right there. Okay, this was URGN. This is a daily chart. Is a swing trade right here. This is when we took URGN. See, it went from bearish to bullish right here, but it was compressing. Once we got this little move above this compression right here, we took it long right here. In for 710, out for 717. It didn't do much for 3 or 4 days, but it stayed green and blue, stayed bullish, and it stayed above the VWAP. I'm sorry, it stayed above the 15 EMA. We took it right there, and then we took profits and bounced up here. 48% profit on that. Another nice one in NVIDIA. I think I showed you this one. This was the PBO, the pullback to the 15 with the bounce. Nice trade there, 32%. SMR, I showed you that one already. It was Nike. This is a trade we took when they were putting the tariffs on. We took it right here. We actually had a pretty good profit on it that day, but we stayed in the trade. Notice that the institutions are selling. When you look at this, you can see that the institutions are selling Nike like crazy, right? Since this candle right here, they've been selling it like crazy. We stayed in it, and then we got this flush down. right? And that was a gap down that we took 216% on that trade that I showed you. All right, and one of the things I teach in the room is gaps are gifts. In other words, if you get a gap down, and you're in a short trade like this, take the money. Take the money on a gap down and take the money on a gap up if you're in a long trade. And there's two reasons I say that. One, obviously you're gonna have a nice profit in there. And the second thing is trades when they gap, less than 1/3 of the time they'll do a gap and go and continue in the same direction. They'll do a gap and chop, or what they call a gap and crep, where they'll just turn around and head the other way. And when you get a gap down on an option that you've got, right? When you get a gap down on an option you've got, the implied volatility of the premium, which jacks the premium up, is going to be very high right at the open because of the big gap. Market makers move up the premium, the implied volatility goes up, the premium options go up. If you take a stock and sell it like at 931, 932, and the stock doesn't move, and at 940, the price will be down on the options because the implied volatility will go down. So that's why I say gaps are gifts, take the profits, okay? Yeah, you'll get a replay of these exactly. These are all automated trades or manual. No, these are manual trades. I do these trades manually. I mean, you've got to take a look at several criteria. When I'm looking at a trade, I'm looking for the breakouts, et cetera, and I show you these breakouts. But I'm also looking at what's the market doing that day, and I've look at what else. I'm trying to find the best stocks that do that. So that's not automated. I just go in and put the trade on, and then I either put a trailing stop on it, or I watch it and go and just put a sell order on it, and do it like that. Now the alerts are not automated, but I send them to you and I tell you exactly what stock to take, how much to pay for it, what the expiration date is, and then I send you an alert to tell you when to get out, what to put in for sell order. Yeah, I don't use automated trades. Nah, I'm basing this on technical analysis, the SPY super system, all the things you need to really really pinpoint the very best trades. The market's very dynamic. I mean, if you're taking an automated trade, you've got to take into consideration what the market's doing that day. It's very important to have that, because those things can change a lot. Or was there a news event that came along? You've got to take all those things into consideration, which I'm looking at all of those things and talking about them during the day. All right, and there's the Sarepta trade. Again, nice daily chart. Are they being sold? Absolutely. Institutions are selling the heck out of this thing. This was HIM's trade. This is a long trade I took. I kind of missed a better entry back here, actually. But I did take it here and made a nice profit on 25%. I left a couple of runners on, but I did include that in the results because it was kind of a lucky thing. All right, so those are the charts. That's the SPY super system. I don't want to take up all your time going into Thanksgiving, but again, here's a recap of what we do in the room and on the alert service, the different strategies we use. We have strategies for markets that are bullish, markets that are bearish, choppy markets. With different strategies we use to make them fit whatever the market happens to be doing, because the market's very volatile, it's very dynamic, and you can't just use one kind of strategy. You've got to have multiple strategies to take advantage of the market. Okay, so these are the offers that the Right Line's got. This is these 60% of this is a pretty big sale. These are the Black Friday sales. This is for the SPY super system software, the actual software I just showed you, right? This comes with the scanners. It comes with what they call a master classes. These are my videos on trading. I've got about 31 of them. All the different strategies you use, the criteria you use, what you look for if you're looking for a time spread, what you look for if you're looking for a straddle, etc. I have videos on all of those. You also get the software put on your machine. Right Line will take over your machine and they'll put the software on there. It's going to look exactly like mine. You're going to look exactly like mine with the same scanners, everything. You'll have the exact same setup I had that you just saw. And you also get access to the live trading room. So you get the super system software and access to the live trading room. This is a really good deal, $9.98 for a year. This is really an outstanding deal for the room and for the software. I mean, really, really good. And if you want to, don't have to do it every year, you can do a one-time payment, which is the software, and the SPY Super System software, same as this. The scanners, my training videos or the videos that I've got. The software will be installed on your computer by Brightline. You don't have to worry about technical problems with it. And then you get room to the office's live trading room. You get access to the room and you get the software. That's $19.98 forever. You get the room and the software forever. Really, really good deal. Now they also have a Black Friday special where you can get a free 2-week trial, right? And you get the text alerts, you get the trading room, and you get these for 2 weeks. And then it rolls over, if you don't cancel it, rolls over to $3.96 for a quarter, right? So this is, this is the way you tiptoe into the system. Now, this is going to cost you more than all the other stuff, of course, because it's done quarterly. You also have an annual on the text alerts, trading room access here for the text alerts, $11.95 for a year, right? And that also includes a Discord room where we have 2 professional traders in the Discord room as well. So you get access to that, $11.95, a really, really excellent deal. This is for if you're just looking at the room and the alerts, you're not looking at the software. And then over here, this is a one-time payment of the same thing, $24.96. Get you the alert service forever, the room forever, the training modules, and the Discord room, and all updates. I mean, you're going to get any changes we make. Like if you buy the software, you're going to get any changes we make to the software. So this is the software with the room, and this is the room and the text alert service, right? Pretty good deals. I do want to point out, I did this calculation, this is return on subscription. This is, I'm assuming that you're spending about $1,600 a year to get into the alerts in the room, based on the quarterly processing. The average trade size being $2,000. So I'm assuming you take all the trades that we post, right, for $2,000. The historical results for every single year, you're getting 40% in return of what you paid for the subscription back, 40 times ROI per year. So the annual profits have exceeded 40 times the subscription cost. And if you take the annual or the lifetime, it's much higher than that. All right, so the subscription is consistently paid for itself many times over. It's got high ROI, simple math proven results. And again, they always disclaimer, past performance is not indicative of future results. I've been doing this for 16.5 years and I've had consistent results, but past performance is not indicative of future results. Trading involves risk. We all should know that. Okay. So that is the deals we have for the Black Friday specials. You can call Rory if you have any questions on any of these things. Right here, 786-732-4656. In the chat box, he has the links to these particular offers right now, so you can click right on that. Okay, so that's the presentation. I appreciate everybody coming here the day before Thanksgiving. I hope everybody has a great Thanksgiving day if you're here in the United States, and if not, just hope you have a good day off. Market will be closed tomorrow. Market will be open Friday, but only till 1 o'clock, half a day on Friday for trading. So I'll be in the room from about 9:15 till about 1 o'clock. But I'm in the room every day, all day long, which is I don't know too many rooms that do that, to tell you the truth, where they have somebody who's a professional trader in there all day long, answering questions, suggesting, showing charts, answering questions and teaching, basically teaching a lot about technical analysis and how to use the SPY Super System software. So do that all day long. Again, so thank you very much for being here today. I appreciate it. And I hope everybody has a great weekend. If you're going to be taking Friday off, have a great long weekend. If not, have a great Thanksgiving. And look forward to seeing folks in the room here pretty soon. Have a good one.
All right, thank you, David, for an outstanding conclusion to today's summit and a tremendous set of insights on precision SPY trading. David's Black Friday special is now in the chat. David, wishing you and your trading community a very blessed holiday season, and thank you for being here today. We really appreciate it.
Thank you. Say much thanks to you. Have a great Thanksgiving.
Thank you, David. Traders, thank you for spending the day with us at the 7th Annual Thanksgiving Investors Summit. A heartfelt thank you to each of our speakers for sharing their expertise, their insights, and their time with the Traders Corner community. We hope you enjoyed this full day of actionable education during one of the most opportunity-rich weeks of the year. As a reminder, the full replay will be sent to you tomorrow and will also be posted on our Traders Corner YouTube channel for on-demand viewing. From all of us here at Traders Corner, we wish you a very happy holiday season, a blessed time with family and friends, and continued success in your trading. Have a wonderful evening, and we'll see you at our next event. Thank you, everyone. You are appreciated.